Everyone is panicking right now. Gold is down. Silver is slipping. But here's the uncomfortable truth most people are missing. This sell-off is not what it looks like. And if you don't understand why gold and silver are falling, you risk making one of the most expensive mistakes of your investing life. Let me ask you something. If inflation is still sticky, if governments are drowning in debt, if central banks keep printing money, then why would real money like gold and silver suddenly become useless? Exactly. It doesn't add up. What's really happening right now is not a rejection of gold and silver-driven sell-off. And that difference matters more than you think. When markets get nervous, big players don't sell what they believe in. They sell what they can sell. Gold and silver are liquid. They're easy to dump fast to raise cash. That's why during market stress, precious metals often fall before they rise. We've seen this movie before. In 2008, gold sold off hard at first. People said it was finished. Then, once the panic passed, gold went on a historic multi-year run. The same thing happened in 2020. Initial crash, forced selling. Then an explosive move higher. This current sell-off fits that same pattern almost perfectly. Another big reason investors are confused is the US dollar. When the dollar strengthens, gold and silver often pull back. And right now, the dollar looks strong on the surface. But this strength is built on debt, rate manipulation, and short-term policy games, not real economic health. A strong dollar today does not mean a strong dollar tomorrow. In fact, the longer rates stay high, the more pressure builds in the system. Something eventually breaks. And when it does, confidence in paper currencies evaporates fast. That's when gold and silver remind everyone why they exist. Now let's talk about silver for a second, because this is where most investors really get it wrong. Silver is not just money. It's an industrial metal. It's used in solar panels, electric vehicles, medical tech, and electronics. So when silver drops during economic uncertainty, people assume demand is dying. But long-term, demand for silver is actually increasing, not decreasing. The sell-off isn't about fundamentals. It's about short-term fear and positioning. Here's the trap most retail investors fall into. They watch price instead of context. Price tells you what is happening. Context tells you why. Right now, context says this: governments are cornered. Debt levels are unsustainable. Inflation hasn't been defeated, it's just been temporarily suppressed. And trust in financial systems is thinner than it looks. Gold and silver don't move in straight lines. They move in cycles that punish emotional investors and reward patient ones. Another misleading factor is interest rates. People hear high rates are bad for gold and stop thinking that historically, gold performs well when real rates turn negative. And real rates are already under pressure once you factor in true inflation. The moment central banks blink, and they always do, the narrative flips overnight. And suddenly, the same people who are calling gold dead money are chasing it at much higher prices. That's how markets transfer wealth. From the impatient to the prepared. So no, this sell-off is not a signal that gold and silver have failed. It's a signal that stress is building under the surface. The biggest moves in precious metals don't happen when everything feels safe. They happen when confidence quietly breaks, and by the time headlines turn bullish again, the opportunity is already gone. Smart investors don't ask, "Why is gold falling?" They ask, "What problem is the market trying to ignore right now?" Because gold and silver don't predict good times. They expose bad ones. And if history has taught us anything, it's that ignoring that signal usually comes at a very high price.